Hi guys, Dan and Kai here again from Crescent Mortgages, and today we're coming to you with one of our FAMQs, frequently asked mortgage questions, and today's topic will be covering interest-only mortgages, specifically on residential mortgages. Before we get started, just to remind you that we are CMAP qualified mortgage and protection advisors with a combined 20 years in the industry, so I'd say we know what we're doing.
Yeah, I hope so. Yeah.
I certainly do. So let's jump into it. Take two, because Kai was picking his ear. You get it all out, mate?
Yeah, got it all out.
Yeah, good man. Okay. So, interest-only mortgages. A lot of you will know what they are, and actually, if you're in maybe your 40s, 50s, 60s, there's a good chance that maybe you did have an interest-only residential mortgage several years ago, kind of at least a decade ago, because they were more popular, although actually they didn't work out quite as well as some people hoped. But for those of you that don't know, what is interest-only, Kai?
An interest-only mortgage, not to be confused with interest-free mortgages. An interest-only mortgage is a mortgage where you just pay the interest. You don't actually pay the thing off, and at the end of your mortgage term, you have to pay it off in your own means. You're not paying it off each month with your monthly payments.
I guess the alternative, which is the most common in the present day for residential mortgages, is capital repayment. And most of you with a residential mortgage will have a capital repayment mortgage, which means that your monthly payment consists of the interest as well as clearing the capital down. So the payment is bigger than an interest-only mortgage because you're paying interest plus the capital. However, with a capital repayment mortgage, at the end of the term, let's say you've got a 25-year term, your mortgage will be fully cleared and your property will be mortgage-free. Whereas with an interest-only mortgage, at the end of the term, because you've just paid the interest, you've not cleared the mortgage down, so you will still have the mortgage debt at the end of the term, which will need to be cleared with whichever repayment vehicle you prepared for it.
Why, I suppose? Why would somebody take an interest-only mortgage? Why would you want a big old mortgage debt left after 25 years?
I guess the reason for taking an interest-only mortgage will pretty much determine whether you should take an interest-only mortgage. So if you're looking to take an interest-only mortgage just because you want to keep your mortgage payments down, and that's pretty much it, then perhaps it isn't for you. Whereas if you're taking an interest-only mortgage because you have a genuine repayment vehicle or repayment strategy that at the end of the term you will use to clear the mortgage in full, and you're confident that you will have access to that money and that money has been put aside specifically to clear the mortgage, then perhaps an interest-only mortgage is for you because it will keep your mortgage payments down in the short term. So the additional money that you're not spending on your mortgage could go elsewhere, and then at the end of the mortgage you'll obviously be able to clear it with the repayment vehicle.
Okay.
Anything I missed?
No, I don't think you got that, yeah. I suppose the main question that most people probably want to know is how, isn't it? Why would you want one? If you're watching the video, you're probably looking to find out how to get one.
I guess the main point here is the kind of the limitations. So probably now's a good time to mention that finding an interest-only mortgage, again, for a residential, buy-to-let mortgages, it's fine, but for a residential mortgage, first of all, a lot of lenders won't actually lend on interest-only. They don't like the fact that at the end of the term, your mortgage is not going to be cleared, and they've got no assurances that you're going to be able to clear it. There are some lenders that will give an interest-only mortgage on a residential property. Quite a few will, but you do need to meet the criteria, and it really all comes down to the repayment vehicle. So your strategy for how you're going to clear the mortgage at the end of the term. Now, there are a few kind of strategies that do pop up, such as savings, if you've got a significant amount of savings, potentially equity in another property. Let's say you've got a buy-to-let with a huge amount of equity and they're confident that you can sell that buy-to-let and use the equity to clear the mortgage. Possibly a pension pot, although that can be a bit of a tricky one if you not started drawing from the pension, or if there's not enough in the pension pot at the point of application.
Correct.
To evidence that the full mortgage will be cleared.
Yeah, what else is there? I suppose other ones that people sometimes try to use but don't seem to work out. I mean, inheritance I hear a lot. You know, I'm not going to pay this off because I've got an elderly relative who, you know, I'm going to be left a significant amount of money for. A lender won't use that. That's quite a common one here, actually.
Yeah, which interestingly is actually probably quite a common reason why someone would take an interest-only mortgage. And In reality, I guess it makes sense. You know, if you've got an elderly parent who looks like maybe they don't have more than a couple of years left, and you know, you're pretty confident that you are going to be receiving a significant inheritance, that we understand that, you know, is a reason why maybe you would want an interest-only mortgage, because you know you're going to have the money to clear it, and you do want to keep your payments down. But as Kai mentioned, the lender has absolutely no guarantee, and lenders are generally very black and white. So they have absolutely no guarantee that the parent is going to die prior to the end of the term. So unfortunately, they usually can't use that.
Yeah, and then I suppose the most common one that people seem to use, and after a conversation seems to probably be the strategy. It is two different things, either called sale of the property, or probably better referred to as downsizing, I'd say, because often, you know, you're buying your 4-bed detached house, you with your kids, and you know, you're buying that big space, and then when they flow the nest, you don't need the extra bedrooms, you don't want the extra bedrooms maybe, and you go from the big expensive house to a smaller house or even a small apartment or whatever it may be. That's probably the most common strategy, which a fair amount of lenders will adopt, the ones that do lend on interest only. I
guess two key points on that. Number one, the lenders will need you to have a significant amount of equity in the property. So if you've got quite a high loan to value and there's not a huge amount of equity, either as a percentage or as a monetary figure, then generally they won't let you do sale of property. Yeah. There's just not enough assurance to the lender that you are actually going to be able to clear the mortgage with the sale of the property, because they don't know exactly what property prices will do.
Probably 200,000 or 300,000-ish for a lot of them.
And often you can't be above around 50% loan to value. That varies, but 50% is often the cap. So if you're above that, they generally won't give you interest only on anything above it. And the second point to make is that just because you can get the mortgage on an interest-only basis using sale of the property, you actually have to be comfortable that you, in reality, will be willing to move out of the home and downsize at the end of the term. We do come across it quite frequently where people are in their home, they've been there for decades, that, you know, the family's moved on, they're really happy, they've got no intention to move, but unfortunately they have an interest-only mortgage which is coming to an end in the next couple of years, and they're backed into a corner where they because of their age, they can't really get the size mortgage that they need, and actually they have to move out of a home that actually they're really, really happy in and hope to be their forever home. So you need to make sure that you are comfortable that unless you come into other money, that you would be willing to vacate that property at the end of the term.
Yeah.
I think that's...
Yeah, I think the strategies.
Short and sweet.
Yeah, I don't think there's too many more that you'd go into. There's some old-fashioned ones such as endowments, which aren't really around anymore, but not really worth us going into those. If you do have one, possibly still possible, but not that relevant.
Enjoyed that one.
Yeah. Yeah, make sure you like and subscribe. And
as always, any questions, leave them in the comments or get in touch, because as we say every time, everyone's circumstances are different, and you just had a final point to make there.
Oh, I was just looking for a banner.
Yeah, you can't click on the banner.
No, it's not clickable.
We're not there yet, but yeah, you should find some information wherever that's popping up. Have a great day. Thanks a lot.